Walmart shares are slightly up as the market digests no, they're not anymore. They're down 1%.
Oh, look at that.
Yeah, interesting. The retailer's strong second quarter reports not helping at least as of right now, but the markets move a lot of different ways. In terms of some of the different stats that we're tracking here, there's been some strength led by strong performances in groceries and health wellness categories as expected. E-commerce also gaining a big boost in the U.S., up more than 20%. Our own Brooke DiPalma has more of the color on this, joining us now with the latest from Walmart's earnings call. Brooke.
Good morning, Brad. Good morning, Julie, as well. I mean, certainly we got lots of color on some drivers that you mentioned previously. The retail giant continues to gain market share from all income demographics. They're highlighting that on the call. They said that that's been pretty consistent now for 5 or 6 quarters. They said the customers really care about value as well as convenience here, particularly in that grocery category. They are gaining sales growth as far as high single digits. They also said once again that they're seeing growth in health and wellness. Another increase that they're seeing is in private label brands. They said that that's been going on since the beginning of 2022. So they said that in the last few quarters, customers have chosen the private brands at Walmart at an accelerated pace. They said that represents about 20% of their Walmart U.S. business. Another driver, that e-commerce growth, we saw sales up 24% in the U.S. E-commerce growth was driven by pickup as well as delivery. They also noted that customers are buying more items on Walmart Marketplace, and more customers are visiting the app and the website. And in addition to that, their ad business is booming. U.S. ad sales are up 36%, once again here in the U.S., driven by that Walmart Connect business that they rebranded back in 2021. They're certainly doubling down on that as they expect to grow profit faster than sales in the coming years. The CEO, Doug McMillon, saying that higher margin business helps to drive that profit there. In the U.S., once again, that Walmart Connect sales increased 36%. Advertiser count grew 60%. And new advertisers as of June include NBC Universal, Roku, TikTok, and TalkShop Live. And so certainly Walmart benefiting from diversifying their profile. And CEO Doug McMillon saying on the call that they really do have a deep bench here.
Let's talk about back to earnings season, because that's usually strong for places like Walmart. So what did they say? Did they give any indication about that?
Yeah, well, they raised their guidance this coming year. In the Q3, they do expect sales to increase by 3%. They also expect full year guidance to increase between 4 to 4.5%. And while, we are seeing other retailers like Home Depot and like Target certainly, post dreary outlooks, Walmart very optimistic here. CEO Doug McMillon did weigh in on what the company is currently seeing and how it could look in the back half of the year. Take a listen.
Typically, when back to school is strong, it bodes well for what happens with Halloween and Christmas and GM in the back half. I do think our food and consumables percent of total in Walmart US will still go up. Part of it's what's happened with inflation and disinflation in the GM categories. But relative to what I would have thought 90 days ago or when we started the year, GM is holding up better than I would have guessed.
So gaining market share, a key strategy for them. But in addition to that, like so many other retailers that we've heard this week, CFO John David didn't shy away from the current headwinds that are facing the consumer. Take a listen.
There continues to be a reasonable level of uncertainty in the economic backdrop for the balance of this year. While inflation is moderated and employment levels have been steady, credit markets have tightened, energy prices are higher, and some customers face additional expense from the resumption of student loan payments in October. As such, we continue to be appropriately measured in our outlook.
And so certainly what we're seeing here is while there is a resilient consumer at Walmart and they're gaining market share, they're optimistic about that going into the back half, unlike other retailers that we've heard this week.
All right, that's all great. What was your vibe from the call? Did you laugh? Did you cry? What was
Well, investors right now certainly not loving what they heard on the call, but overall, I was pretty surprised, not necessarily surprised, but pretty wowed by the call. I think that Walmart certainly is striking an optimistic tone here. They're looking more optimistic than, say, other retailers in the back half of the year. And overall, it's looking pretty good as, once again, they continue to diversify their portfolio. I think what's to look out for is that health and wellness business that we continue to see boom for them as they strategize to really grow that part of the business. Also, their ad business looking really promising for them in the coming year as they put in-store interactive advertisements, and in Sam's Club, you'll see more ads on those TVs that you first walk into. And so lots of parts of the business are growing. And in addition to that, we're also seeing in this environment, customers turn to Walmart. And so I think lots of things working for them right now.
Although as an analyst told us earlier, Walmart price for perfection, Target price for desperation, and that perhaps reflects the reaction that we've seen in each of those stocks to their respective reports. Brooke DiPalma, thank you so much for walking us through the conference call.